Today I came home and I got a letter from the tax department. Now, my accountant says that I don't need to pay personal installments for some reason, but I've got a letter from the tax department. It says you have an overdue tax debt. Your debt is growing daily. Please pay us. Here is your debt. It's $1,000. When you pay this debt, you'll be joining the millions of Australians who pay their tax to support our country and the Australian way of life. You must pay your debt by the 22nd of May 2015. Now listen to this one. This is the really annoying thing. Each day your debt remains unpaid, the debt increases. We charge interest at 9.36% per year, compounding daily. That's daily compounding. That is not 9.36%. That is incredibly high rate. The ATO is the weekend, blah, blah, blah. We're going, unbelievable. These guys are jackboots and all these days, it looks like. No, it's not spam, JR. It's got all the numbers. This seriously, that 20% is probably it. When they say 9.36% compounded daily, it is probably 20%, and they would be fined for making a complaint like that. You know, for a charge like that, it would be untrue under consumer credit laws. So that's, I think, Matthias Cormann's domain. And really, I've never seen a letter quite like that before. And it's misleading and deceptive conduct on the behalf of the government. But I guess that's what they do all the friggin' time. Anyway, let's do some more interesting stuff than talking about a tax debt of $1,000 where they're going to kid you for life. Let's go see what screens are on. Welcome to the Forex Speed webinar for Monday, the 18th of May, 2015, new line. And hopefully this new headset is actually calmer and clearer and more fun than the other one. US dollar index, DX, new line. US dollar index, DX, new line. $92.44 is the area that we are seeking to get some US dollars on board, full stop, new line. Now I want to phone a friend because it looks to me clearly like an ABC retracement. I need to phone a friend because it looks to me clearly like a phone a friend situation because it looks like an ABC retracement in the US dollar index, full stop, new line. Which has come back into the fourth wave of lesser degree. My issue is that 90 would be a more logical target if it was to come back and rest on the old tops, full stop, new line. Another issue that I'm receiving is somewhat dismaying for the US dollar bulls, and that is so far the wave count is really just only giving it a corrective wave count on our friend's count, full stop, new line. Now our friend has a target towards 92.95. We have a target towards 92.44. So who is right? Question mark. The answer is the machine thinks it's corrective, but it's not sure whether it goes back to the old tops. Now the old tops over here sit around 93.32. Full stop, new line. So what that means is we have a zone of between 92.44 and 93.32 where we can start to buy in at, and we'll leave our orders as is at 92.44, full stop, new line. Just for fun, we'll do the AUD USD for at first up, full stop, new line. Over the weekend, I was at a technical analyst conference, and somebody said, if the commodities start up, then the Aussie dollar will just go berserk. And to some extent, I find that quite true. We still have 83 as a target, but we're getting a little bit of rejection off the old high of 81, full stop, new line. So it's a bit corrective in nature. If you are long, stop loss can be raised towards 0.7950 if you're going to try to hang in. AUD USD, new line. At present, I would say this is a correction. So if you want to add to your positions, we can do so on a break above 0.8075 and run a stop on that position at 0.7975. GBP USD, new line. It's hit some old tops. It's backing off. It could be, you could be forgiven for thinking that it can pull back down to 1.56 or even 1.5505, full stop, new line. It was, however, Friday last week, and often we'll get little turning points happen, and then it starts in the right direction on Monday, full stop, new line. Currently, we see some good swings, and if this was to complete its proper target, it would be somewhere towards 1.62, full stop, new line. Yeah, I ran into Tim there. He's a nice dude. Lives in Thailand, full stop, new line. I think he used to work for Slaughter in the Markets, which was a bit strange, but in any event, the area that we see is a pullback down to 1.56 would be fairly normal, just to trip a few stops. You look to buy down there with the stop loss below 1.54, pressing for the higher levels of 1.62. That's pretty interesting. My eyeballs even work when I'm this tired. It's just amazing. That was pretty accurate, 1.62 as a guess. Okay, let's go. EUR USD, new line. Still got 1.1809 on its mind, full stop, new line. The stop loss is at 1.1318. If you are long, full stop, new line. The drift is up, the trend is up. Might even have 1.2 on its mind as well, full stop, new line. NZD USD, new line. I've worked out what's going on with the Kiwi, and the Kiwi, New Zealanders are actually starting to restrict at the margin property speculation, full stop, new line. They're starting to hammer. They let anybody in the world buy one or two houses, and then beyond that, they have some sort of capital gains tax that would be, from what I read, full stop, new line. Now, this may well be why the Chinese have suddenly piled in again to the Australian or Sydney and Melbourne property market with their boots on, full stop, new line. And the definition of a bubble is where asset prices in one asset class have a much greater rate of change or increase than the other ones, full stop, new line. When I hear people saying there is no bubble, I go, hang on. There are places, if there was no bubble, Sydney would be moving the same as, let's say, Townsville, full stop, new line, and it's not. So by any definition, by true definition, we see a lot of bubbles in asset classes, full stop, new line. We have no long-term or long-term bear pause warnings or long-term bull horns warnings in any currencies. I find remarkable. However, we have short-term bear pause warnings in the following currencies. New line. AUD USD new line, GBP USD new line, EUR USD new line. We have no short-term bull horns warnings in any currencies. Full stop new line. So getting back onto the Kiwi, it's triangulating. Full stop new line. But I think they're making the moves to eventually really curtail the Chinese takeover of New Zealand. Full stop new line. And it is a takeover. There is no question about it. The easiest way to own a country is to buy land in it and then vote for your politicians that you want, and then you get control of the country. Full stop new line. It's much cheaper and much more sneakier than going to war, isn't it? Question mark. So the Kiwi is confused. And it does look like it's set up for more downside. So if you can get a trade up to 78.11, then we'll see it going lower. Full stop new line. Not only that, the Kiwi Reserve Bank governor is trying to say that we might get lower interest rates if these restrictive policies on property purchases are successful, then they will lower interest rates. Full stop new line. Mark's saying quite accurately, Mark's saying, I was in Sydney over the weekend, stayed with some from friends at Kingsford. Their house is a shitbox, but cost 1.2 million. That would get them a palace in Cairns or Townsville. Full stop new line. Mate, you should go to Bondi. You see 2-bedroom, absolute knockdown, horrible little shoeboxes on 182 square meters of land selling for $1.8 million on really stress-laden roads. Full stop new line. It is insane. So what will probably happen if this continues, if we allow this to continue, basically anyone who has an income in Australia, who has not been an expatriate or is not a mainland Chinese person with a lot of cash, we will have to move to the regions. Full stop new line. Now, I like living in the regions, don't get me wrong, but we should have some sort of choice about where we live. And not only that, these cities will be empty and none of the businesses inside the areas that the Chinese own will make any money because they actually don't live here. Full stop, new line. Chinese restaurants in Bondi go bankrupt and disappear. There was one that we would go to on a Thursday night, and it was pretty good. A place called Cam Phuc. It just disappeared. The mainland Chinese don't eat at restaurants that are Chinese because their tastes are different. And they also leave the places empty and go back to China. Full stop, new line. It's not the right way to run a country or city just having empty houses. Full stop, new line. And empty houses that are locking up that, you know, areas that people could live in that want to live in the cities but cannot afford to do it. Full stop, new line. The problem is the Chinese have made so much money over the years because we aren't manufacturing anything and they are, that they just have cash and we get crunched. Full stop, new line. USD CAD, new line. Okay, this is slightly a descending triangle and possibly a struggle street pattern. I cannot make it out. If you want to go long, you probably buy a break above 1.2066 with a stop loss below 1.1982, targeting a rally towards 1.24, full stop, new line. Otherwise, sell a breakdown below 1.19 with a stop above 1.2067, full stop, new line. Your target would be somewhere around 1.16, full stop, new line. USD CAD, sorry. USD CHF, new line. It's not sure what to do with itself. Let's assume this is a correction. 0.9375 to 0.95 would be the corrective area with the ultimate target at 0.8457, full stop, new line. USD JPY. US dollar yen, she go up, she go down, she go up, she go down, she go up, she go down. 118 to 122. I guess that's the broader range, and the more tighter range is 119 to 121, full stop, new line. Try and make something out of that. I'm not interested, full stop, new line. It should break out at some stage, full stop, new line. AUD EUR, new line. Nice rally back into the overhead resistance and a smackdown. So probably 0.7 in that area, full stop, new line. I certainly hope, Tim, if you're listening to this and you're in Europe, that you've almost finished your trip over there, full stop, new line. AUD GBP, new line. Really nothing really to be inspired. Could go down to 0.4975, could go up to 0.55, flip a coin, full stop, new line. AUD JPY, new line. You can see the big target area, 97.7. That's something I mentioned before. It's moving pretty well. If it can claw through at 98, then we have a chance at 100 again. full stop, new line. Who would have thought that 6 weeks ago? Anyway, if you want to be long, then structurally long stop would be below 94. If you want a tighter stop, have your stop below 95.10, full stop, new line. AUD NZD, new line. This is working according to cycle. According to cycle, this cycle finishes around the end of May, full stop, new line. And here's what my hallucination is. The Australian government decides to do what New Zealand government is trying to do and put some more restrictions on property speculation, full stop, new line. When that happens, the Australian dollar will correct against the New Zealand dollar in a normal seasonal cycle, full stop, new line. In the meantime, if you are thinking of going to New Zealand skiing, you might want to buy your Kiwi currency at the end of May, full stop, new line. It still will not be a cheap trip because New Zealand has a bigger GST on its goods and services, full stop, new line. Oh, and while I was in the Gold Coast, I wandered into a chemist, and in that chemist, there was a lady coaching the Chinese on how to get back their full GST component from the Australian government, full stop, new line. Yep, the assistant was making sure that Chinese didn't pay any tax in Australia. Full stop. How good is that? I thought the whole idea of having tourists come to your country was so that they would actually spend some money, pay some taxes. But then again, I don't take enough drugs to have a brain that works that way. Full stop, new line. Okay, let's go visit the Forex, sorry, the commodities part of the world. Welcome to the Commodities and Futures Speed webinar for Monday, the 18th of May, 2015, new line. Baltic Dry Index, new line. The Baltic Dry Index has really jumped and it stayed up there, full stop, new line. It backed off a little bit from the previous day, but otherwise it's got something going for it. And the logical targets would be somewhere around about 700 and 881, full stop, new line. This makes me smile about buying some DRYS.ETF. Uranium stocks, new line. We did see the little bit of a rally, but still 34.8 and 34.11 are still the targets, as this appears to be some sort of fourth wave, full stop, new line. Only get excited if it gets through 38, full stop, new line. Chinese iron ore, new line. You know what? This pattern looks so much like FMG, it's not funny, full stop, new line. Now, what we're seeing is a failure at those old highs. I did think we'd go to 59 or 58.99 or whatever number it is. It can still meander down to say 49.43, as low as that, before trying up to 59. So I'm not a super negative, but I start to get super negative below 48. Full stop, new line. Crude oil, new line. Just wafting around, and you'd be forgiven for thinking it can drop down to 58 or go up to 68, full stop, new line. We are going to dangle our stop, still tempting the market at 58.9, full stop, new line. And we'll have a short-term target at 62.98, full stop, new line. Orders on the PHG trade are unchanged. HO, new line. Heating oil, new line. Still hanging in there, nothing totally negative. A drive towards 2.1414 or 2.155 is a good thing, full stop, new line. Natural gas, new line. The natural gas trade is working nicely. Target 3.4, 3.32. It's amazing what a difference buying in April seems to make to natural gas. We're simply going to raise our stop to 2.81, 2.891. Raise our stop to 2.891. We may hit a bit of an air pocket in the seasonals soon, but otherwise stick with it. Full stop my line. RBB gasoline, new line. Targeting towards 2.417 or 2.44. Shorter term targets towards 2.16. The drift is up, but it is a bit over loved. Full stop my line. I'd like to stick a stop underneath 1.9869 if you are long. Well, we're out of it, but if you're still long, that's okay. Okay, now, what's the other one? US 30-year bonds. US 30-year bonds, new line. A time. The US 30-year bonds look like they actually have bottomed for a little while, and it's time to exit our PHG trade short now at 155 and 17/30 seconds, or if you want to leave it for a bit longer, buy a break above 156 and 7/30 seconds. It's actually trading now at 155 and 11. Let's get out of 1/3 right now. and exit 1/3 above 156 and 7/30 seconds, and exit 1/3 on stop above 158. Looking at it, I don't want to really lose the position if I don't have to. Just a second, I need to have a bit of a break. I'll be back in about 3 minutes. Just. Oh, thanks for that. No, don't go, John. I hadn't had any breakfast, so I'm going to munch in your ear if you want to talk some more. Thanks. Okay, John, I'm good. I'm not spinning out so much now. Okay, thanks, John. Thanks very much for that. Appreciate that. I was really losing it. Okay, let's go. Aussie 10-year bonds. These have rallied quite well. The target area is 97.23. The issue that I have with it is it lacks volume. Full stop, new line. So that may indicate that the US market, if it's got declining volume, may just be corrective. And I did worry about that. That's why I had the layered stop losses if it's there, you know, if you've got the short position on. So towards 97.26, 97.23 is the logical area, with a target towards 97.44. Full stop, new line. If you did do the gamma hedge, I would suggest you getting out of the gamma hedge towards 97.26. Full stop, new line. We are not going to change the deep out of the money options positions that we had before. Full stop, new line. It's still got the potential to be a fourth wave in this last move up. Full stop, new line. US dollar index, we've already covered. Full stop, new line. 10-year notes, US, new line. Curious that this couldn't break down below the 61.8% retracement, and that means we're probably playing Fibonacci ping pong, and the Fibonacci retracement for this move probably comes up to around about 128.29. $128 and 20 seconds. So that would be where you would be targeting. Full stop, new line. Hey, Cindy, you've been quiet. Have you been on holidays? Been wondering where you were. Grains, corn, new line. Aha. Oh, and Dawn, thank you very much for yesterday. I had a lot of people commenting on how wonderful it was and what you said, and I really appreciated you doing that for them. Dawn, I did a talk at the technical analysts, and I had Dawn talk, and we had a look at some nickel stocks. I did record that, so I don't know how it will go, but we'll I don't know if I'll put the recording up, but And I don't know how much the recording took of what Dawn said because it was working off my computer rather than through the microphone, but it was nice to do. Thank you, and I appreciate that very much, what you did. So corn's still indecisive as to whether it's strong or weak, and leave it alone. Full stop, my line. Soybean oil, new line. Currently we are long this, and it's chopping around. Correction, currently I thought we were long this and we are not, full stop, my line. The drift is up, it is oversold. I would be leaving it alone until clarity happens, full stop, my line. Again, I think US dollar influences are changing this, the way commodities are working at the moment, full stop, my line. I'd really like to see some real supply and demand pressure going on that is natural to the commodities, not just a US dollar movement, full stop, my line. Soybeans, new line. The beans show the lack of interest in grains in general. 925 to the downside. A breakthrough 975 would be interesting towards 1000, but otherwise leave it alone. Full stop, new line. Wheat, new line. A reasonable rally. Maybe goes to 543, maybe to 526. Stop if long, $5. Full stop, new line. Copper, new line. Copper doesn't seem to like getting through these levels, and it doesn't seem to like going down, full stop, my line. So I'd be buying a break above 2.97 with a stop loss below 2.9, targeting around about 3.1 if you want to trade copper, which I'm not going to do that, full stop, my line. Gold, new line. Target to 1244, we all know that. 1251 has appeared as a possibility also. If you are going long, your stop is at 1213, full stop, my line. There has been some good volume here, and so maybe it's got some real legs for higher, full stop, my line, but I still doubt it, full stop, my line. Yes, it is the right time of year for rallying gold up into November, but I think there's more to it, especially when the US dollar starts to rally again, full stop, my line. And as you can see, the machine thinks all we're in is in wave two. If this is wave two, then the next move down will be a dramatic move down in gold towards 1071 or the ultimate target at 859, full stop, my line. Nickel, new line. This is backing off a little bit. It should come back down to about 861. If it can hold around above really 840, then you've got the opportunity towards 957, full stop, new line. We were looking at nickel, and you can see that nickel has had a good run. The question is that a short squeeze, comma, question mark, or is it a real new thing? A lot of nickel stocks are doing basing formations, as Dawn was saying. One of the best ones, which Dawn liked, was Sirius, SIR.ASX. I like that too. It is also a gold stock. It's also got some gold component in it. So that may be keeping it looking better than the rest of the nickel stocks. Full stop, new line. Palladium, new line. It's not very exciting, is it? It's still within a big range. Leave it alone. Full stop, new line. Platinum, new line. Platinum's more exciting than palladium, at least. You can be buying this with a stop loss at 1139, full stop, new line. And your target would be 1212 or 1253, full stop, new line. Silver, new line. Silver's doing remarkably well. Stop loss would be at 1671 if you are long, and hopes would be at 1850, full stop, new line. Cocoa, new line. Certainly reaching for the sky on cocoa, trending nicely. If you are long, stop could be around about here at 30.48, full stop, new line. Coffee, new line. Coffee is towards 150.2. Stop loss is at 135.7, full stop, new line. Cotton, new line. I was hoping this would fall over a little bit more. It's rallying on declining volume, and maybe if it broke down below 65.6, then it'd roll over. That might be the best place if you've got a stop loss on if you are long, and if you go long, you buy a break above 67.5 with that same stop loss, full stop, new line. Lumber, new line. Lumber popped while we weren't looking. It did miss our nibble target at 230. And it really didn't like being up in the rarefied atmosphere of 2.6 and close to the old lows. So it's been rejected off there and probably can go back down to 242 and maybe down to 230, which is our better target area, full stop, new line. Orange juice, new line. In OJ, we see that basically it's flapping around and we're not that interested in it. Full stop, new line. Sugar, new line. Sugar got whipped back. It's whipping itself around at the moment. I think basically it's probably bottom for a little while for a chance towards 13.38. We have long-term bull horns warnings in the following commodities. New line. Gold, new line. Lumber, new line. Corn, new line. Soy meal, new line. Oats, new line. Soybeans, new line. We have no long-term bear pause warnings in commodities. We have short-term bull horns warnings in the following fixed interest markets, new line. German Bund, new line. German Bobble, new line. US 30-year bonds, new line. Japanese 10-year bonds, new line. We have short-term bear pause warnings in the following commodities, new line. ED, euro dollar, new line. GI, Goldman Sachs Commodities Index, new line. HE, LH, lean hogs, new line. HG, copper, new line. NG, natural gas, new line. PA, palladium, new line. SB, sugar, new line. Let's go on and have a look at the world indices, and we're a little bit late for that, but I'm sorry, but that's the way that it is. Talk soon. See you in the world indices room.